Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, October the 29th. The year's 2019. Let's talk trading. Accepting uncertainty. Um, there's a couple of traders that have been in communication with me, and I see them going down a path that I'm trying to steer them uh, back to a point so they can get off that path. They are, I guess, I would say they're looking for certainty, and there really isn't too many things in trading that are certain. When you place a trade, you can't guarantee that that trade's going to be a winner. You just can't. That next tick could go against you, and the following ticks could continue to go against you. And that's why, of course, we have stop loss. But the main point is that trading is an uncertainty. Life itself is uncertain. You're not guaranteed your next breath. You're not guaranteed you'll wake up tomorrow. I mean, there's just certain things in life that are uncertain. And like I said, life itself is uncertain. And unless and until you, as a trader, truly accept the uncertainty of trading, you are forever going to be stuck. And it's just that simple. You're going to be stuck. You're just not going to make progress. You're going to be on that endless search for the holy grail. It doesn't exist. I mean, trading is simple. Price goes up and down. That's it. It either goes up or it goes down, or actually it doesn't move at all. Those are the three options. Up, down, no movement. And so you have to embrace that. So it doesn't matter if you're doing a simple horizontal line cross at the open, whether or not you're using one of my methods, the buy zone, the wick zone, the rat zone, using ATR percentages, any of that stuff. You even squiggly lines. It doesn't matter. And that's why there's hundreds and thousands of indicators. Somebody's trying to find something certain. And I mean, in the beginning, because I was taught by, traditional trading methods, yeah, and squiggly lines, moving averages, stochastics, RSI2, MACDs, you name it, Bollinger Bands. Oh, yeah, I became a master of the squigglies. But then I came to a realization they don't work. They really don't work. You're fooling yourself. That's why I went to horizontal lines. That's why I went to the open. I went to where everybody said to avoid. Avoid the open. It's too volatile. It's too this. It's too that. And then it hit me like a ton of bricks. The light bulb went off. The aha moment. It's like everything is measured from the open. So if you get into a trade at or near the open price, at or near the open time, as price ranges, you have a chance to capture part of that range and profit. And that's when I started running frequency distributions. And now some traders, they're latching onto my idea of running these frequency distributions, but it's like they once again they want to overanalyze and make sure every trade is a winner. It's not going to happen. The whole idea of never lose again doesn't mean you're never going to lose any particular trade. It means in the long haul you're not going to lose. You'll be a winner. Okay? But part of being a winner is losing. But it's not losing any more than you're willing to lose on a trade. It's all part of the risk management that, I beat it to death, but that's because to me it's one of those legs of the three-legged stool, okay? You have to have that in place or you'll get killed. See, when I came up with the buy zone, I didn't need to, for myself, I didn't need to specify a stop loss because it was obvious. If price moved up to where I want to go long, it reverses and goes to where I want to go short. Well, duh. It's time to either exit the trade, take the loss, and possibly go short because that's what the buy zone's telling me to do. But I took a lot of flack for that. And it wasn't until I moved away from the open price and started using other methods, or like the rat zone, I think, and then the wick zone, that I had to say, okay, yeah, you have to specify the stop loss, because if you're always using, the same position size, it might not make sense to put the stop loss where it would be placed at that position size. So that's why I said sometimes if you know where you're putting a stop loss, then you calculate your position size. If you know your position size, then you calculate your stop loss. So in the buy zone, usually the stop loss is either going to be the open or the other zone. And so those two positions where those stop losses are going to be, and you wind up calculating your position size accordingly. But fellow traders, just remember one thing when you're watching my videos. These videos are for educational purposes only, and your results may differ from mine. And that when you get involved in trading, it's very, very risky. You can lose all your money. So if you need advice, if you're seeking guidance, find yourself an accredited financial professional. That way, when you lose all your money, or they lose all your money, it was lost by an accredited financial professional rather than somebody you stumbled across on YouTube, the internet, or wherever. Okay, that being said, you see here for the week, there really, really isn't much range here for the week. I mean, we're 25 pips above the weekly low, 16 pips below the weekly high, 23 pips above the weekly open. Just not much movement on dollar yen. But we're only 74 pips away from the yearly open. Who knows? We just might make it past there. Might be up for the year. We're 83 pips up for the month and 24 up for the week at this present time. But on the daily, you can see we're down 7 pips. And we are inside the range of the first trading day right here, inside that high and low. And you can see right here, the first trading day of the week, we did break out of yesterday's high, just barely by about 3 pips. And so you see, that's one of the reasons why when you trade these breakouts, sometimes you might have to scratch the trade at, 0, or just take break even plus 1 or 2 or 3. But sometimes there's not much to offer. And you see, you can run frequency distributions till the cows come home. But the point is, on this next trade, none of that matters because it might only go 1 or 2 or 3 pips. And that's why you have to have an exit playbook. So if price is moving fast, what you do. If price is just chugging along, what you do. And sometimes you maybe take 1 or 2 pips and the thing will run another 20 and you'll kick yourself. And then the next time you go, oh no, I'm not going to do that. It goes 1 or 2, 3 pips and you sit on your hands and then it drops against your 20 pips. And then you kick yourself. That's why you have to have a playbook so you do what you need to do at the time. And that playbook will protect you. And so, thing is, usually you remember the things that went against you, but you kind of forget the ones that go for you. So, if it goes up a couple of pips and you exit, then it drops 20. A week from now, even maybe the next day, or you're not going to remember that trade. But if you took 2 or 3 pips and it ran up, 20 or 50, oh, you'll remember that. So once again, it's that selective hindsight, that selective memory that causes many, many, many traders to get in trouble. Talking about the buy zone here on the week, you can see what happened here yesterday. We haven't come back to that weekly open yet, but we're not too far from it. So anything could happen. Inside bar break, you see we touched the inside bar here of 1 week ago. We touched that high and then moved back up slightly because yesterday we broke out. And you can see there's some inside bar trades here that are still available. Oh, yeah, and the one trader was asking me about this. This is the TRO uh, um, 2017 dashboard. And I haven't, and I send it out to the people who donated in 2018 and 2019 because I still haven't had time to make the next version, which is going to take literally a complete rewrite. And I just don't have the time to do that, or don't want to take the time to do that right now. But you can see here, we have the inside bar function. And as I had mentioned, somebody else was asking something here. And you see it has all of these different functions. So when you see the different screens with different columns, it's the same indicator. I just picked different functions. And I think the function count is at 123 right now. On the I'm still testing a couple of functions that I'll be probably sending out sometime really soon here. Anyway, back to here's another example of the dashboard, but we're looking at range here. Only 4 pairs over 100, and they're all pound pairs again. So I was thinking about starting to look at trading the euro USD, but maybe it's time to move back to the pound pairs. Even though I usually don't like trading pound pairs for few reasons, the way they move, the spread, etc., etc. You can see that breakout of the previous day's high, fell back into the previous day's wick zone, and then came out the other side. And somebody was asking me about a wick zone indicator that showed that the statistics. And you know what? I haven't run it in so long, I can't even remember what the name is. I'll have to look it up and maybe present it in tomorrow or the next day's video. Okay, what do we have here? We have some monthly and daily H1 highest opens and lowest opens. You can see that it's just not much distance between these. Once again, the range is only 23. The pivot, where was the pivot? The pivot was inside the short zone, so no real bias, but the pivot did get taken out. And as I mentioned, rat zone trade is off. We took out that pivot, but we have a weekly pivot that we haven't hit right down here at 108.55. Who knows? Maybe that'll get taken out this week. It's only Tuesday. Anything can happen, right? And we've got a new missed pivot here. 1028. We almost hit it, but we missed it just by what? A pip or less. And once again, when you're taking these pivot fades, it doesn't have to hit the pivot for you to make a profit. Price action, still, even with the low range, price doesn't like staying between those two lines. The wick zone in and out is normal, as usual. Horizontal line trades, there was only that one, which wound up being a scratch. You can see here the Einstein line from far ago, a long time ago when I opened up the chart. But you can see here the trades that were presented at the tick level. ATR, not even, well, we did hit the halfway point here, but the ATR is so small, it's almost not even worth mentioning. But fellow traders, what is worth mentioning is it's not what you trade, it's how you trade it. So go out there and drain the banks.